From his sprawling office in his suburban Denver home is my friend and trading colleague, Kevin Horner. Hey, Kev.
Hey Lee, let's do this again.
Yep, it'll be a little bit more in detail on some areas than in Trader Talk, and we don't look at individual stocks in charting the markets, but we'll continue here. We want to hear from you in the Q&A functionality underneath the presentation window, so send in your questions. We'll make it as interactive as possible, but we can't always get to all questions due to the number of people on these sessions. We also have our usual written disclosures we are required to show. Everything Kevin and I talk about should be considered as educational and informational in nature only. Nothing should be construed as a personalized trading recommendations. Any expressions of opinion that either of us make could change at any time based on market conditions. We look at a lot of charts, but we don't recommend technical analysis by any means as your sole method of investment research. We look at ETFs and ETNs if you're going to trade those products, though. Read a prospectus. We also look at futures contracts if you're going to trade those. Read the risk disclosure document for futures and options. And with that, put up the old heat map as we review the news on this very quiet Friday in the markets. Yeah, right. Okay. So overseas, excuse me, Germany's Federal Statistical Agency updated monthly new order volumes for German industry. The numbers were for April. They were bad, so nobody really cares. Basically, the DAX has rallied all the way back to within 10% of its 52-week high, and it's actually has outperformed the S&P 500 by 17.7% since mid-May. We'll also take a look at that European ETF I told you about. Not that we give recommendations, but it's just interesting to watch it. We also had some labor market data from up north in Canada, kind of like ours. They unexpectedly had stronger than anticipated results after 2 months of record losses. The country added almost 300,000 jobs. The unemployment rate did tick up to 13.7%, though, which was a post-war record. But that's because more people returned to the labor force, and economists were anticipating a loss of 500,000 jobs, with the unemployment rate rising to 15%. So they beat on both of those metrics. And it's the same, it's basically the same deal over here. We had our employment report today, which of course, now the market in the futures market overnight was up even before that came out in anticipation of a good report, but it was even better than thought. They thought it was going to be terrible, and it was actually better, much better than thought. In every basic metric, average hourly earnings did decline 1%, but that was simply the result of more people at the lower end of the wage scale coming back to work. In employment and leisure and hospitality, you increased employment by 1.2 million, while in retail trade, jobs came back 368,000. So the key takeaway here, I think, is that the increase in non-farm payrolls reflects our economy getting back to work sooner than the market itself was anticipating, and the market was anticipating a pretty swift recovery. The V-shaped narrative on the economy is certainly seeming to play out here. What this should mean, and we talked a little bit about it, but we'll see when we look at the charts, you getting outperformance of what you might think you should. Small cap, cyclicals, and value. We'll take a look at all those ratios coming up here. Also, it's spurring the FOMO trade, fear of missing out, big time. Anyway, I got all the individual numbers, but that's, I think, what you have to know there. The other kind of news that came out since Trader Talk this morning is that, the U.S. had said that we're going to ban all flights to China, passenger flights, that is, but they changed their mind. So they're dropping that. Yep. So Delta and United are obviously in the reopening rally here, but that probably helped them even more because they were pretty eager to resume their service to China. Okay, let us go and take a look at, we'll start with some commodities here. Let's take a look at the dollar. It has broken you know, this is the UUP. You can see it did break support. So I think this is definitely good for the big caps because of the exports. Let's take a look at the actual DX index, though. We can't get that on Street Smart Edge, unfortunately, but we can get it on stock charts. So. Yeah, so 98 was the level. We told you when it broke that, look for a rally, and that's happened. We're down to we're below 97 now. So
Wow. It really accelerated with us, so did it?
yes, indeed,
Hmm.
indeed. Okay, let's go here and take a look at gold. We had a pretty good discussion on the metals yesterday with Mike Zaremski. The front month is now August. Uh, we have broken short-term support. With the dollar dropping, I think this just shows you they are winding out of the safety trade, right? I think that's what's happening here. So if you're a short-term trader, I think the easy money on the upside is over. If you're looking for a downside target based on this chart, if you consider it, can you consider it a range or a double bottom, double top rather? The measured move here would be what, 1790-ish to 1690-ish, $100 from 1700. That would put you right at the 200-day moving average. That seems to be, if it's going to continue to go down, a reasonable short-term target.
Yeah, I like what you've set there, Lee, as your levels. Given the nature of this move, coincident, of course, with the big pop to the upside, I think I agree with you that if you've been long, this would be a time to maybe pull a little bit off the table if you've been participating on the upside there. I think that makes a lot of sense, Lee.
Yeah. When we talk about the dollar, what is it against? It's against a basket of 6 major currencies. That's the dollar index, with the highest weighting being euro. We told you to watch the euro, which has been on a tear. I don't know why this is scaling the way it is. Now let's look at the FXE. I don't know what's going on with these futures quotes. Okay, I'm having a little bit of an issue here.
Uh-oh.
Is there some? Yeah, let me see if I zoom in. Which,
Do we have a bad quote there that was
yeah,
being
is there a bad quote? Is it this one?
I think that's a bad tick. I see it. If
It's
is
right
that
here,
right?
isn't it?
I I think it might be, or a little left of that.
Let's see, a little left of that. This one? I don't know. You can fix your ticks by
Hmm.
doing this. If it said, I should have done it on the. Anyway, the euro is going up. This is the FXE. The dollar is going down, and the euro is the um, greatest weight in the dollar index. Let's see if it does it with anything else. All right, let us look at the gold miners. There we go. So they broke down out of the head and shoulders, Kev.
Yeah,
We
sure
were
did.
watching that. We were, there we go.
Keep boy, and it tagged the bottom. That low today, coincident with the last low on May 1. 31.31 on May 1st, 31.22 today.
Yeah, so let's see if it can make a recovery here. But as we had said, the easy money in the gold miners was over when we didn't make a higher high in here. Now the measured move here, if you do consider it a head and shoulders, is, let's just say roughly
About
30,
four?
yeah, about 4 points from 33.5, that'd be 29. That'd be right in about here, which makes sense, which is the
Mm-hmm.
this low from this flag formation. So now it could stop at the 50-day. If you think it's overdone, then you might be, if it holds the 50-day, maybe you put a stop under today's low and see what happens. But I'd be a little wary of doing that, I think.
Yeah. You know, what would worry me, Lee, would be any bounce back into the 10-day as resistance, because it's proven to be resistance now. A couple of challenges there.
Yeah, right in here.
So what may set up would be a little bit of a head fake, bounce off the 50 and slam into the 10-day. And if it stops at the 10-day pretty quickly, or if you see it trade to the 10-day and then just kind of lose all interest, that's a really good indication of the subsequent weakness from there. And that might be the spot where short traders might come into play a little bit.
Yeah. Let's take a look at silver. Take a look at the silver ETF. Well, next line in the sand is the 200-day. It's flat though.
Yeah, it's right at support too.
Yeah. So that's a key level on this one, 1582. Let's take a look at the silver miners. Yeah, they broke down.
Sure did.
Yeah, I got stopped out of those. With a little bit of a profit though, but I did get stopped out. When I took this out, I had to stop under there. All right. So anyway, it could drift down to the 50, or it could be a false breakdown, but I kind of doubt it because I think the metals being the risk off play is kind of waning with what's going on in the equity market. Okay, let's take a look at the doctor though, speaking of different metals. Yes. Copper confirming this rally. Look at that.
Nice move to the 200 there, Lee.
Yeah, we said that was the potential target. And so did Mike Zarensky yesterday. So now we'll have to see what happens. But that's a real cyclical tell right there.
That is very, very nice to see. Real indicative that we're getting back to business, isn't it?
Yep, for sure. Now, again, when you have a move like that, it might, as you can see, it paused at the 200. If you were long, maybe. So let's take a look at the copper miners. Yeah, right to the 200-day also. Maybe take a little off the table, but not everything. The trend is higher highs and higher lows.
Yep.
Okay.
Agreed.
Now let's look at interest rates. The bond market is beginning to believe the recovery, Kevin. Let's take a look at the 10-year.
10-year targeting that 1%.
Yeah. There's 1%. I'll put that line in there. Right there.
Yeah, we made it pretty high today, Lee. I think our high today is what, 95 basis points.
Yeah. And the thing, this is the 2-year is not moving that much, and this is, so we are nicely bear steepening that yield curve. Let's take a look at the 2x10 yield curve. It has been on a tear. That's why we're getting the big bop up in the financials. So let's take a look at there. Look at that. Yeah. You can see the two. So
what we're looking for.
Yeah. Now the 2-year is not moving that much. It's the 10-year yield. If we look at the 2-year yield, see, it hasn't really budged. So this is the kind of steepening that you want, where the longer end, the yield is going up faster than the shorter end. That's called bear steepening. Why is it called bear steepening? Because you look at the price of the long bond. If rates go up, it goes down. That's what you want, bear steepening. Okay.
Looking better, Lee. Looking better.
Our bond signal triggered yesterday, and it's a good thing. Let's take a look at that.
Yeah.
You gotta love your job, right? So here, see, there was our sell yesterday, and look at that, a drop of almost 2%. It got ourselves just in time. Yeah. So the
Wow.
bond market is respecting this rally in the stock market right now. All right. So now this is in a negative orientation. If you wanted to do trend following, maybe you wait for a little bit of a rally, but then you put on your short. You can either short the TLT or you could do there's the TBF, which is the opposite. That's the inverse. Not that we really recommend inverse and leverage ETFs, but whatever.
Yeah,
Okay,
maybe short term.
short term. Yeah, so, gee, who said to buy the Fez a week ago? Yes, Kevin, it was me. It was me. And this thing is rallying. We told you that the sentiment was so bad in the Merrill Lynch Money Manager survey of Europe that they are getting squeezed. Ah, love it.
Mm-hmm.
Uh,
How's your shoulder feeling these days, Lee?
no, it's sore. It's
It's
sore.
sore. Just a lot of back patting. It's been
Yeah,
interesting.
it's been interesting.
And admittedly, rightly so. It's quite all right. But
Oh, I
I
still
like
like
to see
it.
it.
Well, we don't give recommendations, but certainly it's possible it could go up to the previous uh, area there that it was holding before, 3876 perhaps. So
Hmm.
yes, I think it is a bullish looking chart. At least many technicians would say so. All right. So much for that. I'm going to turn it over to Kevin, who is our index guru. I'm going to just make everything off this chart, and you tell me what you want to put on, Kevin, and let us know what's going on.
Well, Lee, with that S&P, I think the one to monitor initially is going to be the 200-day, which we have been above now for about 2 solid weeks almost. But if you'll put up the 10-day, you'll notice we've been above it since our last real breakout here, which came on May 18. So I think a lot of us are eyeballing that 10-day as a short-term support here. We do have a new gap in play, so we would obviously not like to see us drift anywhere into the gap in the coming days or weeks here that we have made today. But, this is really a positive viewpoint, bullish activity for the last, really bullish for going back at the beginning of April. But of late, you've seen it trend much better, and the significance of the 10-day can't be overstated, Lee.
Yeah, for sure. For sure. Let's take a look at the 50. So
Yeah.
look at the 50 versus the 200, because when we look here at the NASDAQ, we see something a little different with those. Yes, friends, we have the golden
Yeah.
cross, new high on the all-time high on the NASDAQ, or it's right there. It's
Let me
right
see.
there.
Yep, 200 right now. Yeah, really, really close.
Yeah, so I've got some data here. Really what I want to talk about is that golden cross. Some people, it isn't that effective, but it makes a difference where it occurs. And I wanted to talk about that just a little bit. So we're getting it basically near the highs. It was not a great buy signal, but it wasn't a reason to sell either. Just looking at previous times, we had a golden cross when we're within 5% of a high, which is obviously what we have. Forward returns were positive. If there was going to be any weakness, it would be 2 months out, but still it was up 56% of the time on average 2 months out. The golden cross was much more positive a signal when you were less than 5% below the all-time high. This just goes to the speed of both the sell-off and the recovery. Yeah.
That is
The other thing
interesting.
is, the other thing, talking about momentum, Kevin, with the Nasdaq, if you look at times that it pulled within 1.5% of a 52-week high after being in a 30% drawdown. That's our
Mhm.
current situation. Would you agree?
Yep.
All right. What did that mean going forward? Well, uh, it meant that the next week was a coin flip. Now, there hasn't been this many times that this has happened. I'm looking at 1, 2, 3, 4 times since 1971 we've had this setup. 1 year later, all 4 times we were higher, so that's 100%. 6 months
I can do
later,
that math.
yeah, 6 months later, we were up 3/4 of the time. The only time that it didn't go up was the signal on May 14th, 1975. Um, so this is a pretty good signal for forward rates of return
Mhm.
on the NASDAQ.
And Lee,
Yeah,
I wanted to mention here, yeah, you're right. We actually paused for a brief second before popping through there, but we just in the last 2 minutes have now made a new high. If we close above 9,800 on the Nasdaq, it'll only be the second close above that level ever. So very important area to maintain today. Obviously,
yeah,
is that 9,800 kind of mental hurdle as well. So
yeah. It'd be nice to close above that, right?
it would, and it almost feels like it's getting a little bit more exuberant. It'd be kind of surprising if we don't just continue to see this optimism bleed into the afternoon trade.
This feels like a trend day to me. I don't think we're going to get a lot of pullbacks myself.
Yeah, I don't think so either. I mean, every time I've looked, they've been very limited in nature. The selling is not very interesting at all. Like anytime you get except for, of course, the ones that have been working as the so-called stay-at-home strategy, right? A lot of those are showing weakness as you kind of unwind some of those positions. You get a little
Right.
bit of profit taking, I'd imagine. But that's something that I imagine next week we'll see a few of those names bounce back too.
Yeah. Now, the other thing I would say is, did those statistics I gave you for the NASDAQ, yes, it was for the NASDAQ, did it have any impact or predictability for the S&P? Why, yes, it did. Right? There's 1, 2, 3, 4, 5, 6, 7, 8, 9, 12 times. We were up 11 out of 12 times a year later, so 90%. And uh, the weakest time period was the next week after this signal. I'm talking about what happens to the S&P after the NASDAQ signal. Still, we were up 70% of the time. So there you go. Now we have a couple of questions. Let's get to the questions before we start looking at a few stylistic things. So the first question was, what would you use for the NASDAQ composite? So the Qs are the NASDAQ 100,
Mm-hmm.
which is different than the NASDAQ composite. They are breaking out very strongly today. If there is an ETF that does the NASDAQ 100, the symbol is the 1Q. So if you actually want to do the NASDAQ composite, you would use the 1Q. If you want to use the NASDAQ 100, which has been outperforming the NASDAQ, because let's just compare
Or
that.
everything, or
Yeah,
everything for that matter.
yeah. So let's just put up. We'll show you the Qs versus the 1Q. Yeah, you can see basically since the middle of May, this is down sloping. Right? That's showing you the outperformance of the Qs versus the NASDAQ. Uh, Now, one other thing that people have been talking about, let's see if it's still true, is let us go take a look at the equal weighted Qs versus the Qs. So this is the equal weight NASDAQ 100 with an E in there. All right, and let's compare that to the Qs themselves. Let's see if the advance within the Qs is broadening a little bit. Yes, that's a good sign, right?
Mm-hmm.
So you can see that
Yeah, we
the
like
equal weighted is definitely outperforming versus the Qs, which means you are basically it's broadening. And you can see that in the advance to decline line too. Let's take a look at advance to decline line on the NASDAQ 100. That's just showing you what we were talking about. So the advance is broadening. Okay. All right. Now let's just look at style for a second. We've got this rotation into value and cyclicals, and let's just see the extent of it. So this is the value S&P value ETF, and then we're going to compare it to the growth ETF of the stocks in the S&P 500. You can see the rotation, right? The rotation
Sure.
started right in the middle of May, and it's just picking up speed. So there you go.
Wow. Big move today. Big.
Yeah. Yeah, and if you want to see the rotation vis-a-vis sectors, let's do our little graph here. Right? Look at them.
Mm.
There's the rotation, right? Huge rotation into energy, right? Huge rotation into, you can see XLF, XLI, XLB, and what is, you can see what's lagging now, right? It is the safety kind of, okay, staples is getting weaker, utilities, real estate, except for one area. I'm going to show you that. And even technology is taking a little bit of a hit as they're rotating out of some of that mega caps just a little bit into the cyclicals. So, and then you can see it in real time happening.
Man, that is so cool.
Here we go. All right.
That is such a cool graph, Lee.
All right, we have some other questions. Let's see. The first was, what's the downside target on the TLT?
I think you got to call it the 200, right?
Yeah, I think so. Yeah, that's also, yeah, right in here. So 148-ish, probably. Yep. Let's see. Um, let's see. The other question was, how do you get the heat maps for other things in the futures, like the indices? Kevin, you did this morning, and I'll just redo it, just so people can see how to do it. So just go into schwab.com.
Yeah, this is a great way to look through it too.
Yeah, go to trade source, and click on markets.
If you're into the visual learning, visual aspects of this as much as I am, at least.
Yeah, you want to go down here to the heat maps. So you can see what's leading the Dow today is Raytheon, Boeing, Exxon, UNH. We were talking about that they got upgraded by Goldman today. Then you can do, if you want to do the NASDAQ 100, you can see what's moving there.
Airlines,
Airlines, yep.
gamers,
And gamers. We told you about
win.
BJK. We told you about BJK. We're gonna
Were
take a
you
look at it.
listening?
Were you listening? We're gonna take a look in a sector in a second. Um, and then you can do it for you can do it for the S&P 500. You want to know what the leader in the S&P 500 is today? Energy, Occidental,
Mm.
Apache,
What,
Royal
what
Caribbean.
what about the small caps, Lee? That's the one that's kind of it's been absolutely out of control of late. They've been hot.
Yeah, so that's a publisher. Energy.
Mm-hmm.
I'm not familiar with that one. That's an energy
I think
type
that's
stock.
energy also.
Energy.
That's energy.
That's a real
That is
estate.
surprising.
Neighbors is an energy. So yeah,
Mm.
it's that. Yeah. All right. Let us take a look at what is moving sector wise. Oh, let's look at the Russell. We didn't look at the Russell. So, look at IWM.
Goodness, it's putting on a 5% daily.
Yeah, just because of financials and energy a
It
lot.
is.
Yes, indeed. Yes,
Running through.
indeed.
So its move today is blowing through the 200 day. I
Yep.
mean, wow, such a fantastic move. Now, probably here coming into a little bit of resistance. Look back at your chart here, Lee. There was some congestion back here at this height, right around 152. But still, fantastic move, and it's really been great. Look at the 10-day for the last 3 weeks.
Yeah. Don't stand in front of a freight train.
That's the truth.
All right. Let's take a look at see what's moving sector wise. Well, let's look at the ones that we have been mentioning just to see how we're
Sure.
doing. We mentioned this one when it broke out of this blue line. These are the game, not the gaming stocks, not the gamers, like
Right.
Activision, so Wynn Resorts, and all those types of stocks. So there you go. The other one we were looking at that we said, well, you might want to look at the home builders. Oh, gee. And then I said, well, hang on, the REITs are getting hit, but I said, why don't you watch the mortgage REITs? Oh,
Mm-hmm.
another winner. All right. Broke out yesterday. We pointed that out. Continues its today. Now, whether this will keep going, I don't know. With the 10-year going up, maybe in the short term, people will be afraid that it's going to keep going up, and maybe they accelerate if they want to get in now. But it's hard to say. But the chart is saying that it looks positive for the mortgage.
Mm-hmm.
All right, let's see what else is moving. What's my watch list? Trouble with this. There we go. All right, so let's sort by today's change. All right, oil service, the one I told you about. Let's take a look at the oil service stocks. That gap is filled.
That looks, well, if you've been waiting, now you can consider entry with a stop below the white line there somewhere, Lee, right? I mean, that's the movement for the gap, actually the low of the day.
Yes, indeed. I have a question. When you overlay SPY on top of VOOV, you don't see VOOV outperforming because I'm comparing it to VOOG, which is the growth stock aspect. There's more value stocks than growth stocks in the S&P 500. That's why you're not seeing the outperformance. Okay. There's a trade setup though, right?
Yeah. Yeah, absolutely. I mean, we talk about waiting for breakouts to start a position because once it breaks resistance, now you've got your area to set your risk, and you wouldn't expect it to come back and get below that low. And that would be the key there, I would say, is if it didn't break the low today, then you've got every reason to stay in the position.
Yep, I think
Now I know
so.
that that's a big difference because if you look at the level on it today, Lee, um, the low of the day comes in around, if I can get my cursor here, it's, what is it, 147.20. So you're still giving up 7 points from here, but your upside, everybody, is, what is that, 200 day at 199,
Yeah, you got to.
192 it looks like.
Yeah, I
Yeah.
mean, it might pause at 183, but
Mm-hmm.
that's very minor resistance.
Mm-hmm.
All right, see here. Let us go to our list again. Banks.
Yep.
The rotation and fine. Let's first
Big
look at the
and
X.
regionals.
Yep, we'll take a look at the XLF.
Right to the 200.
It's had such a move the last 4 hours, what
I mean,
20%
it
move,
has,
isn't it?
yeah, well, just off that bottom there, Lee, from
20.
mid-May on the 17th or 16th, somewhere in there.
It's 30%, right? Yeah.
Yeah, 6 points is 30%.
Yeah, so if you want a place to take a little off the table, this is certainly a reasonable place to do it. I wouldn't get out of the whole thing, but for sure. Now let's take a look at the banks. So these are the money center banks. Looks like they're going to resistance here.
It sure does.
Although if it closes like that, that would be kind of a spinning top after a big
Mm-hmm.
move up. That could mean a little consolidation for a couple days, but so.
Wouldn't be all that bad too to consolidate at that spot.
Yeah, so you want to know within the XLF what industries are doing well. The way you can do that is with the easiest way. There's two ways, but the easiest way is just use the Screener Plus tool and open up the performance by sectors, go to financials, and then sort by. It depends on your time frame, but we'll just let's look for the last 5 days. Okay, so
Mortgage.
I told you about that one. That's the
You sure
REM,
did. Yeah.
right? Consumer finance over the last 5 weeks.
23%.
Yeah, banks and insurance, and the brokers are probably lagging a little bit.
Hmm.
Yeah.
My goodness, Lee. That is, oof,
Yeah, let's look at
that's some
insurance.
big percentage moves, Lee.
There's insurance.
Yep.
They're all moving.
Getting a straight up doji at the moment.
Yep. Which could mean a pause. Uh,
Yeah, let's see
yeah,
where it finishes.
yeah. Let's see. All right, let's see what else is moving other than those. Travel, stocks in general. Look at yeah, I think we showed you this one yesterday. This is
Mm-hmm.
the travel ETF. Here's the airline ETF. So they're getting, now that might mean a pause. Look, it went right to resistance and then it turned around.
Sure did.
So maybe a little enthusiasm is it's got to be walked back just a little bit. But that's kind of maybe this run. We've had a huge run, right? It's
I mean, a
almost doubled.
massive move,
It's
Lee.
doubled. So I think maybe this is suggesting a little bit of a pullback. It wouldn't be the worst thing if it even pulled back to 18.
Well, yeah, what are we even talking about though? I mean, when you talk a pullback, I was looking at it on the 60-minute bars, Lee,
Let me do that
and
for you.
yeah, and just kind of tracking what's going on here. You know, it hasn't broken the low of the day. So at least for now, you're still gapped and held, right? To an extent, you'd like to see it maintain it, but could we come back in and test the top of that spike that's from 3 days ago or last day, yesterday's high? Come back and you tag that, you could still see that move.
Yeah.
So you've got some areas in here where you could see this so-called selling or profit taking coming in from this morning and today, kind of abate a little bit. But you're right, it's been a heck of a rally, so it wouldn't be shocking to see it give some of it back.
Yeah. See what else is moving. Aerospace, we had mentioned that one was firming.
Mm-hmm.
And defense. The daily chart. Probably going to drift up to the 200, I would think.
Another good looking chart.
The travel ETF was away. So we had a question on that. See what else is moving. Auto stocks. Probably because of Tesla more than anything.
Mm-hmm.
See what the weighting is in Tesla in this. Yeah, it's number one.
Number one.
11%. But what I find interesting, remember Jeff Kleintop was watching, he wanted a tell for the recovery if the auto stocks started dramatically outperforming the household product stocks. And luckily I have a chart on that which shows that is indeed happening. So let me go back to my chart list. Ever since he mentioned it, I've had it up there. I mentioned actually that it had happened earlier. Where's that chart? Oh, darn. Ah! There it is. It's doing what he said to. It is doing what it said. So
Yep.
this is the ratio of household products to autos, and I had mentioned it when it broke out of the triangle, and now we're getting back down to. So this is confirming this kind of cyclical rotation as well. Okie dokie, and with that, Kevin, our time is up. But there's more good stuff coming up here on Schwab Live Daily. Nina Milovac, former CBOE market maker, will be joined by regional